Good morning and welcome back to Morning Markets from True Potential. Today we're going to be looking at US banks, their latest results for Q1 and why this is important. US banks kicked off earnings season for the first quarter of this year. Really important because clearly banks have been a focal point in March, coming under stress, particularly in the smaller regional banks with the collapse of Silicon Valley Bank and some other smaller banks. So this reporting season of particular interest where investors are looking for any signs of further stress, any pullback in lending to corporates and businesses. JP Morgan kicked things off, reporting better than expected earnings results. JP Morgan is the largest US bank there is. They're really benefiting from the stress that we've seen in the smaller regional banks as deposits from those smaller banks have found their way to the larger banks as investors or consumers see those as more safer haven. And you saw an increase of 37 billion of deposits with JP Morgan since the collapse of Silicon Valley Bank. And that's really helping driving their results, making them more, even more stronger as a business. Their results were up 52% in terms of their profits for the first quarter. So real strength there. And they've raised their guidance for the year ahead in terms of their earnings. Elsewhere, Wells Fargo, another big bank in the US, reporting better than expected earnings, up 35% from a year earlier. They did, however, warn about further potential losses from commercial real estate, which has been in the press over the last couple of months, given some of the stress that's coming through on commercial real estate loans. So they've set aside provisions of $634 million to set aside against any potential further losses from this part of the business. In terms of the other banks that we've heard from, the likes of Citigroup and PNC and JP Morgan and Wells Fargo, on the whole, they're still performing very well, attracting deposit inflows despite consumers still looking to generate a higher return by going to the likes of money market funds, but they're still not seeing any stress, benefiting from higher revenues from their loan book by putting up higher rates and relatively immune from losses on their fixed income portfolio. Looking to the week ahead, we'll get more results from banks, but particularly from the smaller regional banks, which will be really important to see any further stress and whether we're seeing a pullback in lending. But we'll also hear from other sectors. We'll hear from companies the likes of Netflix, Tesla, and IBM. So please stay tuned and we'll keep you up to date.